We're clearly not the only player in the space, at least not anymore. There's been a surge in M&A activity across wealth managers and investment managers looking to scoop up firms or platforms that are all claiming to offer direct indexing. And arguably the space is starting to look a little crowded. Tom, how are these providers differentiated? And what's going to distinguish the direct indexing winners from the losers in the coming years?
Yeah, so this is a slide we put together to try to visualize the ecosystem or the space that we're talking about here. And it's a really dynamic space. And I was just looking at it again, and it's so dynamic that it's already a little bit out of date because O'Shaughnessy's asset management product Canvas was purchased by Leg. So I think that speaks to the fact that there's just a lot of acquisition and happening in this. And what you're seeing is basically incumbent firms buying up a lot of technology that they can use to implement this. And one might think that it's real, this means it's just a technology play, but in reality, there's a really important human element here. And that's what we've discovered for our research is there's a shockingly low degree of awareness of direct indexing among advisors. About 40% of them have not even heard of it. And it's been kind of interesting to talk to those advisors because I want to get back into sales. I say, well, what if we could get you a product that offered the S&P 500 return, but generated an extra 100 basis points or more for your customer? Would you be interested in that? And they all perk up. Yes, they haven't even heard of this. So I think what's going to define success here is the firms that are able to partner with either the asset managers partnering with wealth managers or wealth managers partnering with asset managers and technology providers to actually describe to advisors what this is, what the benefit is, how to implement it, and then give them materials to articulate that to clients. That's what's going to be defining success. The other areas, when we look at direct firms, I think there's a lot of interesting things happening there that's going to drive consumer awareness. I mean, Charles Schwab is right now beta testing a personalized direct index that targets their Schwab 1000 index at about $100,000 minimum. So I think you're going to start to see this you're going to see a lot of awareness happening, and that's going to be, the firms that are able to do that are the ones that are really going to be successful here, who are able to educate advisors, educate clients, and get them feeling comfortable with this product.
Great. Brian, when you look at this ecosystem, what comes to mind?
Yeah, first of all, it's clear that advisors and investors have a lot of choice, and that's a great thing. And I don't know each of these firms as well as Tom and the Cerulli people do, but certainly this is an industry that Parametric and I have been involved with as a practitioner for decades, and it's exciting to see the interest. Obviously, it's a little bit amusing to think that this is a new thing. It's been 30 years here. But what strikes me, and I go back to that first point that Tom made about what direct indexing is, that market exposure with customization. Then that third point he talked about, which was somebody has to manage that trade-off between customization and the tracking error it creates, or the return difference it creates versus the target, and the tax value that customization, or the ESG value that customization creates. And each of these providers, certainly Parametric in our role, have a way of doing that, bring a value proposition to the client about how do you think about structuring that customization, measuring the risk it creates, managing it over time, and then reporting on that to the advisor and the client. And some of the certainly Parametric and others who are positioned like us see that as really an investment activity that takes the combination of technology and scale and research and all of that with highly trained client service, portfolio management professionals, because this is a very, very complex, detail-intensive activity. Some of these providers will create a software program and put it on the advisor's desk and say, hey, you do it. Here's a technology that allows you to design the customization, implement the customization, and report on it. And that may be attractive and may bring this service to a different type of a market. But so far, and this is not necessarily meaning that the future will just be like the past, so far the majority of the assets in the ecosystem exist in full discretionary third-party asset managers. I believe that's going to continue for a while at least, even though I think the market will expand. It's because the value proposition, the use cases the real sizzle and connection between advisors and clients is around clients who have real use cases that benefit from customization and can spend the time and energy to dig into it. We'll see what fractional shares bring. We'll see what technology can do in terms of direct to investor. But for the most part, this is a product that really cements the relationship between an advisor and a client in creating wealth management opportunities, tax opportunities, ESG conversations. And that's where we see the real dynamism remaining.
Yeah, I think, at Parametric, we often talk about our ability to provide customization without compromise. And I think a lot of the times we're asked, how is that even possibly scalable? But you touched upon a lot of that. It's a balance between advanced technology and skilled specialists that are there to support conversations with clients, to onboard these accounts, to implement the personalized portfolios for our clients.